we start with the definition of bookkeeping. Bookkeeping is the keeping of books. That's the layman's definition. But we try to put a kind of definition here. Every day of your life, transactions occur in your life. Whether you run a business, whether you run a ministry, whether you run a vocation, or just your personal life. Before you got here today, I'm sure you engaged in some transactions. Is that right? Yes. If you had your own car, you must have fueled it this week. That's a transaction. If you didn't have your own car, maybe you joined a bus, or you entered a keke marwa, or you entered a bike. Now you had to pay. That's a transaction. So when you talk about bookkeeping, it's basically the act of recording our day-to-day transactions. And for a business also, every big business that we see today started small. The act of recording it on a day-to-day is what you call bookkeeping. And that is important to an individual, it's important to an organization. Now, these transactions can be purchases, sales, expenses, revenues, and the likes. Now, I want to find out how many of us are here who works for organizations. You are an employee. Lift up your hand, let me see. Employees, lift up your hand. Okay, we have a lot of employees. Put it down. How many of you work for yourself? You run your own business? Okay, good. So put it down. So I'm sure it's going to be more useful to you. For those who work for as employees presently also, you will find it useful, but maybe not now, in the future. Because most of the places you work should have a structure in place where things are accounted for. You say you want to collect float to travel to Enugu, the process is in place. That's bookkeeping they are doing. Or they take it to the other level, which is accountability. Now I need to let us know that bookkeeping is different from financial accounting. Bookkeeping is a part of accounting, but accounting is far much wider than bookkeeping. There are a lot of complications. I mean, I'm a professional accountant, but there are things we face in the course of our job, and it can really get complicated when you start looking at maybe group accounts. You want to prepare consolidated financial statement. When you see some group of companies, I see people say they want to run group of companies, but to run a group of companies also involves a lot of financial complications, because not very many accountants knows how to prepare consolidated financial statements. So when we talk about bookkeeping, that you are a bookkeeper does not make you an accountant. I've had people say, there's nothing an accountant can do, I cannot do. I have this my small register, I record all my expenses, I record all my income. Is that not what an accountant does? It's far much more than that. There are places today, you read things in the news and you hear 42 million embezzled. No, sometimes it's not embezzlement. It is because a place that should have an accountant had a bookkeeper in charge. So when they face the man and they say, we are looking for 42 million, he said, sir, come and check my bank account. It is book that didn't balance. Money is not missing. That I'm sure of. So sometimes we are quick to jump to, oh, that man has stolen. No, sometimes they have not stolen. But complications occur. Why do you think some banks, when they close, they don't go home on time? They close to the public by 4:35, and then sometimes some people are there till 9 p.m., 10 p.m. What are they trying to do? They are trying to balance the record. So a bookkeeper cannot do the work of an accountant. Very, very important. We need to know that. Bookkeeping is performed by a bookkeeper, somebody who can, keep records of transactions, and then the person may not necessarily be an accountant. But for you to be an accountant, you must have gone through your academic training or your professional training, and then practice. Now, okay, I've said that accounting is quite elaborate. Bookkeeping is just a part of accounting processes. But what we are going to be focusing on here is bookkeeping, because a lot of us are here today. When we look at, there are people who are running businesses, and when you ask them, how much did you make last month? They have no idea. How much did you make last year? They have no idea. When you don't keep proper books, it's difficult for you to do a lot of things. Okay, this is trying to expatiate further. We are still on the introduction. Now, this even now gets more complicated. Academically, the way we are trained in school is that when you see people who have gone to do the accounting technician scheme, they are called bookkeepers. They are not called accountants. Now, such people are expected to be able to generate in accounting what we call a trial balance. But I'm not going to be talking about that, otherwise I will confuse a lot of you. I'm not going to talk about what you are not going to be able to make use of. I will talk about the things that will benefit us. So, generally, a bookkeeper should be able to put things together and come up with a trial balance. But let's leave trial balance for these 3 weeks we are going to be discussing. Whereas a financial accountant is expected to be able to record financial and other transactions of the organization and use the information. He must be able to generate a trial balance, a P&L account or income and expenditure statement, a cash flow statement, a value-added statement, financial variance analysis, financial ratios, and other types of management reports. So you are seeing now that some of us that think, oh, I keep records, I'm an accountant. You are far from being an accountant. It's quite a lot. When you see some ratios, a lot of ratios you need to prepare to help the organization to know in what direction is the organization going, what adjustment needs to be made. Now, we now need to look at the benefits of bookkeeping. Before I go into, it's always good for us to understand the importance, the advantages, the benefit. Sometimes when they ask you to keep proper records, you don't want to keep it. Oh, it's my business. Whatever comes in, I spend from it, it's nobody's business. Yeah, you may be right, but when we look at the benefits of bookkeeping, why do I need to have a clear record of what I sell, of what I buy to sell? Why do I need to have a clear record of all the expenses that I run in my life? Not many people can do that. Number one, the first benefit of bookkeeping, as we have it here, it gives the business or the individual a clear picture of the performance. If you have, let's look at, in accounting, you always have a periodic performance, maybe for a year, or for a month, or for a quarter, or for half year. Now, if you are selling something, or you are rendering a particular service, like I run Rich Consulting Limited. It's a small business that has a big name, Rich Consulting Limited. And we render services. We don't do buy and selling. We render services, but we have a lot of records. If you ask me, what was our revenue in the first year, what was our revenue in the second year, 2010, 2011, 2012. All I need to do is open my laptop and then I can get you the figures. What were the various expenses that were incurred in running the business? I can generate that for you. But a lot of people cannot do that. So the first benefit of bookkeeping is it gives a clear, it helps to provide a clear picture of the financial performance. Now, your financial performance can either be positive or negative. Are we following? That you are trading in a business or you are rendering a service does not mean that you are going to make profits. No. Your performance can be profitability or a loss. So now when you don't even have a clear picture of whether you are making a profit or a loss, how can you know whether you should continue in that line or not, or make adjustments? So the first thing it does is, when you've been able to put together all your costs, there are some costs, for example, that as a bookkeeper you may not think about it, but an accountant will think about that. Let me give you an instance. You run a small business, you have a car. Can somebody tell us what are the expenses? You use your car for the business now. Let's say it's a small business. Maybe in trading, or you are rendering professional service like we do. What are the likely expenses you will incur on that car? Fuel, yes, correct. Yes. Car maintenance, that's the servicing of the car repairs, correct. Huh? Car wash, washing of the car is part of it. Wear and tear. Now, that is what I'm saying. A bookkeeper may not think of that, but an accountant will tell you that there is something called depreciation. That means you can't fully know the performance of the business unless you know how to put all the entire cost together. Yes, you are driving the car. If you bought the car for 2.5 million, that car is not going to last forever. So there is an expense item called depreciation that needs to estimate the useful lifespan of that particular asset. If you are engaging the asset in running the business, or you are even using it for your own personal life. So when you look at that, you now see that, okay, this vehicle will last me for 10 years if you know how to drive very carefully. That's not realistic. That's why you all laughed. Okay, 5 years. So you come up with a depreciation rate of about 20%. So when you are looking at the cost of running that business, the depreciation of that vehicle is part of that cost. So if you put that in, what looks very profitable before may not be that profitable again.